Turning to the economy, the Federal Reserve announced its second interest rate cut this year, trimming its benchmark rate by 0.25% amid cooling inflation, and it lowered the federal funds rate, that's the rate banks charge each other for short-term loans, to a range of 4.5% to 4.75%. And joining us now to break it all down is CBS News contributor Javier David. So, Javier, a lot of people hear these numbers, they hear about the big picture implications for the economy, but what does this mean for the average person?
Right. So as the Fed hiked in 2023, rates on credit cards hit multi-decade highs. So what this means is what the Fed are lowering, it should be sort of pushing down those rates. But they haven't come down as much. They haven't been as responsive as they should be to as monetary policy should. And the average credit rating, according to Forbes now, is kind of stuck close to 29%. And the big reason why is because a lot of these consumer-facing rates like auto loans, credit cards, and, of course, mortgage rates are heavily influenced by what happens in the Treasury bond market. And the Treasury bond market very recently has been sort of sucked into the vortex called the Trump trade, where the markets are aggressively pricing assets according to what they think the incoming administration's policy things will be about, and in turn, interest rates have been going in the direction that we don't want them to go, which is up.
Obviously, plenty of people keeping an eye on the housing market. What does this mean for mortgage rates in particular?
Unfortunately, there's just no rest for weary homeowners that have been on the sideline, or home buyers or would-be home buyers, eager to buy for the first time. Mortgage rates have been sort of stuck close to 7%. It's not an environment that's conducive to buying. Prices are still quite high. In certain markets, they've come off, but generally speaking, and we don't even get into the rental market, which is also quite expensive, and a big part of the reason why is because mortgages are expensive and home prices are expensive. So the logical flow of people moving out of renting into buying a home is just, the pipeline is just kind of clogged.
So as we look at the timeline of impacts that this could have, when could people start seeing more in their bank accounts? What should they be doing with their savings?
Right. So this is actually a good time to be a saver because with interest rates relatively high, they're coming down because the Fed's cutting. But those of us that have been sort of, have money socked away in a savings account, you're earning interest on that. And that's a good thing. And with markets rallying to record highs, it's also a good time to be an investor, not just in 401k, but dabbling in ETF funds and other things that are interest rate bearing and will earn you some money.
And so zooming out just a little bit, we saw over the last couple of years, inflation rates go up to tamper, not inflation rates, the interest rates going up to tamper inflation or attempt to tamper inflation. Yeah. The timing of this, though, why now? What's the reasoning behind lowering the rates now?
Well, the Fed has been very concerned about what's happening in the labor market. There's been softening there. So they felt that inflation had come down to a level that they could feel comfortable easing interest rates and borrowing costs for a range of people. But now, the economy has actually, strangely enough, been performing. But prices are still very high. And there is a sense that with the incoming president-elect and his policy plans, certain things that he's proposing could reignite inflation. He's proposing a raft of tax relief for a bunch of different constituencies. He's talking a lot about tariffs. These things could be kind of like light the fuse all over again on inflation, and that's a concern for the Federal Reserve.
One of the things that we heard during the campaign trail was that, the economy is doing well, depending on who you were listening to, I guess I should say. The economy is doing well, but so many people across the country are really struggling still with those high prices and keeping money in the bank account. So when it comes to Donald Trump, how are the average Americans going to be impacted?
Well, I think that some of the proposals for tax relief are, generally speaking, accretive to people that are working class. So some of the things that he's proposed, again, there are a lot of things that are proposed in the campaign. Whether those become actual policy is another question. But some of the things involving workers that get taxed on like what they get in tips and certain things like that, some of that you'll be able to keep more of that in your pocket, and that's a good news story.
Yeah, red or blue, everyone is certainly going to be watching the economy. Javier David, we appreciate your time. Thank you.